A very good morning to all our viewers. You've tuned in live to this Moneycontrol broadcast. You're watching Opening Bell with me, Stacy Pereira. Well, I'm here to take you through all the cues and news that you need to be watching out for and that could impact your trading day. So stay right here because we're going to be getting you all those updates through the show. And of course, to look at where the markets are heading, especially when it's going through new days, new highs every day. Let's take you straight to all that's making headlines. Well, we do have the U.S. markets that have closed at its highest level since April 2020. It was the banking stocks really that have led this rally on Wall Street that we're seeing. We saw some really great numbers coming in from Bank of America as well as JP Morgan and others. That, in fact, has also passed on that cheer to the Asian markets, which have opened on a positive bias. One could say that strong handover coming in from Wall Street. Whereas if you look at the GIFT Nifty, that one is hinting at a mildly positive start for the Indian markets. But we also are in the thick of the earnings season, and which is why we did see IndusInd Bank yesterday report its Q1 numbers, wherein its profits have jumped about 33%. Net interest margins, that ones have come in at an 8-year high. And in the earnings that you need to be watching out for today, we do have L&T Finance, Tata Communications, as well as Canfin Homes, which will be declaring their Q1 results. Let me also get you a setup of how people are pumping in money into the Indian equities, where we do have foreign institutional investors, or FIIs as we know them, who've gone ahead and bought shares worth 2,115 crore rupees in yesterday's trade. Whereas if you look at the domestic institutional investors, or DIIs, they were the ones selling their shares worth 1,317 crore rupees. This is the provisional data that we get from NSE, well, for the trading day of yesterday. But a lot to look forward to. Let's also get you a sense of the F&O cues and what we're looking at there, where we do have 31 stocks which are seeing a long build-up. These including Polycab as well as Persistent System and Havells India in that list. Infosys and Bosch also in that list. Among 48 stocks where we are seeing a long unwinding. Now this could include RBL Bank, Canfin Home, as well as Syngene International, ICICI Lombard, the one after their earnings, as well as the insurance and Container Corp. So those are the ones that are seeing that. 82 other stocks are seeing a short build-up. Now this includes Coforge, Titan, M&M Finance, Mahanagar Gas, as well as United Spirits. And if you look at the other side, there are 25 stocks that are seeing short covering. And these include Reliance Industries, Delta Corp, Ipca Labs, as well as Indraprastha Gas. So a lot of action there in the F&O space that you need to be looking out for. Let me also tell you the status of the F&O bans that have been put in place by NSE. Well, they have gone ahead and retained Delta Corp, India Bulls Housing Finance, as well as Manappuram Finance and RBL Bank on its F&O ban list for July 19. So those stocks will be under the ban list. Whereas the new additions that have been made, they've also gone ahead. Securities that have been banned under the F&O segment will include companies where derivative contracts have crossed that 95% of a market-wide position limit, and which is why these companies are being brought under this F&O ban. So we'll have to be looking out for that. But a lot to be discussing in trade today. Well, let's get to those strategies and stocks that you need to be looking out for and what will be in the spotlight. Joining me now is Rajesh Palviya, the Senior Vice President at Research at Axis Securities. Thanks so much, Rajesh. Good morning. Thank you for joining us. But let's get straight to it. We are at a time where we're seeing a rally, we could say, but also consolidation of one sort, volatility that we could expect, but a good handover. So mixed signals, one could say, but how is one supposed to be riding this? What levels are you looking at for the Nifty? We're already there at 19,700. Where do you see this going from here?
Good morning, Stacy. So it's a one-way really which we are enjoying in the market, 16,800 to 19,800 now. So almost 3,000 point really for Nifty. It's a very big really on a continuous basis we are seeing in the market. Looking at the data setup in the previous session, again there was a short covering action in the Nifty, but on the Bank Nifty there was a long unwinding setup was there. But still, put writers are very much intact at 19,600, 19,500 strike. Though some unwinding action was there for 19,600 put, But still looking at the concentration, we expect that, if any volatility comes in market and if any minor dips comes in the market, then 19,650, 19,600 are likely to act as a good support area for any kind of minor dips in the near term basis. On the higher side, yes, call writers are active at 19,800, 19,900 strikes. So some pause we can see in the Nifty for this current weekly expiry. Possibly Nifty may take some bit of supply pressure around 19,800, 850 zone, and it may remain in the range of 19,600 to 19,850. So some consolidation we can see in the Nifty for some couple of trading session, but overall structure is bullish. Buy on dip should be your strategy to play this sideways consolidation which we are projecting. You can initiate here short straddle strategy where you can sell 19,700 call option at 100 rupees and 19,700 put option at 45 rupees. So your net inflow for premium is 145 rupees. Your upper break even area is 19,845, and on downside you are protected up to 19,560. Keep your stop loss at around 175 for writing this premium, and we are projecting target of 65 for this short straddle strategy to play the Nifty sideways behavior, which we are projecting for next 2-3 trading session for this weekly option expiry.
Right. So Rajesh has given us a good strategy there on where we should be looking out exact counters as well. But Rajesh, let's look at this. We are in the thick of earnings season. We have some big numbers that have already come out from the IT sector. We have more big numbers coming in the next few days. Reliance, Infosys, all the blue chip heavyweights, you could say. Could those really be the move breakers now? Could that really take Nifty to that 20,000 levels or bring it down further? Do you think earnings will be that, what is going to be that changing factor?
So we have seen market has given a thumbs up post the IT stocks earning has come. So there is no as such negativity by the market participant post earning of IT stocks. Looking at the projection for this quarterly earning, we are optimistic and we are expecting that most of the companies are going to deliver the earnings in line with the estimation. So there won't be any negativity in terms of earnings. So we are bullish, and yes, definitely Nifty is marching towards 20,000 mark. Yes, Reliance could be the stock where we can see this rally can extend, and maybe possibly Reliance can scale up to the new all-time high, which could support Nifty to move further higher towards 20,000 mark. Yes, Infosys could be challenging at this moment. Again, market is cautious towards the Infosys earnings, so that is needs to be watched how they are going to deliver because still there is no confidence towards the guidance. But overall setup for on the technical front, we are still having a bullish view on the IT stocks, and we may see a rally in the mid-cap IT space from the current level. So overall setup on the earnings side is looking positive, and we expect 20,000 level can be there in the July series itself.
Right. Stay with us, Rajesh, because we are going to be talking about a lot of stocks that are in focus because of their earnings. One such being IndusInd Bank, which reported its earnings yesterday. Now, the private sector lender has registered a 32.5% year-on-year rise in its standalone profits, which came in at 2,123 crore rupees. This for the quarter ending June of FY24. And also, if you look at the provisions and contingencies, those have dropped to about a 20.7% on a YOY basis, coming in at 991 crore rupees. Now, if you look at the net interest income, this is what is really gauged as the money that is being coming into the banks. That one has grown about 18% on a YOY basis for IndusInd Bank, coming in at 4,867 crore rupees for this quarter, whereas their net interest margins, like I told you earlier, at an 8-year high, expanding to about 4.29% from the 4.21% in the same period last year. So quite interesting earnings there, pretty much in line with expectations. But let's also get Rajesh's view on how he's looking at IndusInd Bank. The commentary from the bank management was also fairly robust. Banking stocks as a whole, we're seeing pretty good results, even from what we saw with HDFC. We have all the other bigger names, ICICI Bank over the weekend. How are you looking at banking names? Let's look at IndusInd first and then give us your overall view of the banking sector too.
So we are holding bullish view on the banking and financial, and we do expect that this banking sector is likely to continue further more upside. Looking at the IndusInd setup, if stock crosses above 1420 level in today's session, then possibly this rally can extend, and possibly upside target 1460 to 1480 is possible for IndusInd Bank in today's session. So hold your long position and keep your stop losses at around 1355, which is important support area for IndusInd Bank, and we are projecting target of 1460 to 1470 in today's session.
Right, so IndusInd Bank could be something that you need to be looking out for in today's session. But another one of the earnings that came in yesterday was that of L&T Technology Services. Now, this company has recorded a 13% year-on-year growth in its profits at 311 crore rupees for this quarter of June, whereas the revenue from operations have grown 15% on a YOY basis, coming in at 2,301 crore rupees for this quarter. Whereas on a sequential basis, though, there is a drop of about 8.5% and 2.9% respectively. So that is another counter that you'll need to be watching out for. Also need to look at their revenue in dollar terms. That for the quarter has grown by 9.1% on a YOY basis, coming in at $280 million, I beg your pardon. So this is one counter, L&T, that we need to be, especially in this mid-cap space that we're looking at. That will be something that we need to be watching out for. Of course, we've already spoken at length of how the street has given quite a thumbs up to the Nifty large cap, at least IT stocks so far. But we'll have to look at how these other ones play out. IT definitely being that sector that is showing those signs, saying that they are ready to withstand the storm, whether there is a recession or not in the in the Western countries. They've managed to buck the trend. We've seen that in TCS as well as Infosys in terms of the order wins that they have got. So a lot to be riding in that front, especially for these counters and how they're really performing in trade. But let's also look at how markets have opened up today. There on your screens, all of those counters, the small caps, mid caps, all of them comfortably in the green, we could say. Just new highs, new days. We're looking at all those counters, all sectoral fronts also very comfortably in the green. FMCG there on your screens, high and above. Nifty Pharma, that also a couple of earnings that are expected in that next week. That counter also well in the green. Auto doing about 0.06% high there. So a lot to be looking forward to, but all of them, we could say all in all, comfortably in the green, all of those sectors. Realty also, that one being, a little seesaw of sorts, but in the green. Let's also look at the gainers that we're seeing on your screens right now. IndusInd Bank, that one, of course, after that earnings that we just spoke about. NTPC, Infosys, in anticipation of that earning, because that's the big number that we're going to be looking out for tomorrow in terms of the earnings season. Your other gainers are Tata Motors, Bajaj Auto, Bajaj Finserv, also Bajaj Finance, all of those. So NBFC and banking counters doing pretty well, we could say. As far as the loser are concerned, there on your screen, Eicher Motors is down about, Maruti Suzuki, M&M. So the auto names there not looking so good in the slow lane, one could say. Those are the top losers. Cipla as well as Hindalco also there on your screens, down and about in a trade for now. So we do have a fair sense of what we're seeing. We're seeing the earnings reactions for sure. We're seeing IndusInd get that thumbs up from the street, but auto counters now down and about. Let's ask Rajesh of why he thinks that these auto counters are facing this kind of the hardship, rather, why they are in the slow lane. Rajesh, why auto counters not doing so well? Is it in anticipation of their results, or is there other factors that play? El Nino, all of that, when it comes to rural recovery, are we not seeing that really translate, and which is why auto not really feeling, or perhaps feeling the heat in trade today?
So we have seen a very strong rally in last couple of months, and most of the stocks are now, taking some bit of, profit taking at higher level. But if we analyze the overall structure for most of the auto small stocks, be it four-wheeler space, two-wheeler space, most of the stocks are enjoying above their, breakout level. So some profit taking could be there in the near term basis, but the overall structure is bullish. So our advice would be, if you get any chance to buy again auto stocks in corrective move around 2-3% lower from the current level, that would be again, opportunity to buy and accumulate these automobile stocks. And we do expect that, again, automobile sector is going to again, continue further more upside in the coming months. So buy on dip should be again your strategy in automobile space, and you can use this minor profit taking is as an opportunity to buy again and accumulate these auto stocks in the decline.
In terms of that, we are going to be looking at this earnings counter. We saw CIE Automotive India also give out its Q1 results yesterday, and the component manufacturer has recorded nearly a 60% year-on-year growth in its consolidated profits, which have come in at 301 crore rupees for the quarter ended June. This is according to the Q2 calendar year of 23. If you look back, the good earnings could be backed by that higher other income that has come out and a strong operating income as well for the company. The profits too have included that higher income, which has been discontinued from its operations, so which is why you're seeing that big 60% number there. Revenues for the quarter have grown by about just 4.7% on a YOY basis, coming in at 2,320 crore rupees. And another stock that we should be looking out for is that of a State Bank of India. Now this, because the largest public sector bank has received an approval from its competent authority to set up a new trustee company as its wholly owned subsidiary for managing the Corporate Debt Market Development Fund. Now this is interesting because this Corporate Debt Market Development Fund is something that will be then managed by SBI Fund Management. Now this will be identified as the investment manager come sponsorer on the said fund. So this is going to be interesting of how this plays out, because now the management giving that go ahead to make this fund, the special one, to be looking into only the corporate debt part of it. Another stock that should be on your radar rather should be that of Mazagon Docks. Now we get to hear that Sanjeev Singhal, who was currently the Director of Finance, he has been given an additional charge of that of chairman as well as MD for the shipbuilding company, and this will be for a period of another 6 months and will take effect from August 1st. So that is something that you need to be looking out for, whether this management change will make any difference. We have been seeing that counter quite upbeat in trade, especially when we had Prime Minister Modi travel and we got to hear of those defense tech deals. This was one of the stocks that was buzzing in trade. So we have all of this lined up for you. Let me bring in Rajesh once again to get his final view on what stocks and sectors that he would want to recommend for our viewers at this point. Rajesh, what is your top picks at this point?
So again, I think one should look at on the pharma side, and pharma space can show some bullish momentum in today's session. If you look at post-opening, some of the pharma stocks are doing good. So from that space, we like Glenmark, and we expect Glenmark can continue for the more upside. 750, 755 could be the possible target in the near-term basis. Keep your stop loss at 705. Another stock which we like that is from mid-cap IT space, that is Birlasoft, is looking very strong, and the kind of breakout we have witnessed in last couple of weeks. Stock is showing a series of higher top, higher bottom formation. We are projecting target of 410 to 415. Keep your stop loss at 383. And the third stock which we like, that is from consumer space, that is Tata Consumer. And looking at the overall setup for Tata Consumer and the derivative data setup, we expect this stock can scale up to the level of 885, 890. So Tata Consumer is a buy with stop loss of 843.
Right, so three counters there that Rajesh has given us, Tata Consumers as well as Birlasoft, that you could be looking out for. Well, thanks so much, Rajesh, for joining us on the show and giving us those stocks and strategies that we need to be looking out for. We hope to see you soon again on the show. Well, also let's look at the broader picture and why the markets have been on this stellar rally and whether that is going to continue. And who are the players this time around? We have been seeing normally it's the large cap or your blue chip stocks that really lead the rally when we get into this, big rally or long rallies that we see. But this time around the picture is different. And why is it so? Well, we have to see who are the ones really putting in the money, where is it coming from and why. and whether now is the right time to be looking at the other, not the benchmarks, but the broader indices, and if there is a party there and whether you need to be a part of it. And joining me to discuss all of that is Feroze Azeez, the Deputy CEO at Anand Rathi Private Wealth Management. Good morning, Feroze. Thanks so much for joining us live here at Moneycontrol. Let's get talking about first at length the report that you all recently put out and whether this is the right time to be increasing your small cap allocation. But we'll get to that first. Let's first look at the big boys and how they are performing in the benchmarks and give us a sense of where you're looking at the benchmarks at the current level and whether you think 20,000 is not too far away.
Hi, good morning, Stacy. Point one, yes, like you rightly said, the markets have rallied from the March lows. Markets always have this tendency to bottom out. If you can identify those periods where there's signs of those bottom outs, you would be able to enter the market and not be hesitant when the market's correct. So when Nifty had touched about 16,900 odds in March, the FI net short position was so high, 91%, which implied that there was more shorts than longs in the market. And if there is any good news, then there will be short covering. And that led to more short covering and more good news coming in. And today we are at the peak. So 20,000 isn't too far. I'm sure markets have the tendency to test these psychological markets before they correct. So that's a high probability event. Of course, there's no certainty of anything when you come to investing or capital markets. That's point one. Point two. I think, like you were also mentioning in the earlier part of the show with your other guest, that there are some sectors which have not contributed to this rally, and IT is one of those sectors which is now, after the results of 3 to 4 Nifty companies in the IT space having given away, that's also showing bottoming out kind of signs. So there will be newer contributors for Nifty's next leg of growth. Earnings have supported. We were one of the first to predict an earnings of 772, 775. It ended up at 772 from 530 in the COVID year. So I think earnings last year closed about 816, 17. If you remove the Axis Bank acquisition of the City business, then the Nifty earnings were 835, 840. So we are looking at 930, 936. So if earnings support, I think the rally is not just liquidity driven, but fundamentally backed with corporate earnings, which is the pillar on which capital markets stand.
Right, and like you're saying, corporate earnings are going to be the one really pushing that. We have some big names, lined up. We have Infosys, we have RIL, ICICI Bank over the weekend. How do you think these are going to be the ones that are really going to push this market or really take Nifty to 20,000 and then set it forward from there?
See, I think what's been seen in the IT now, if I go with the Infosys kind of expectation, not just from a stock perspective, but what we've seen is, of course, the results which have come from the IT sector so far have not been beautiful, have not beaten the expectation, but still you see markets having given some thumbs up to those stocks. That implies that the expectations were reasonably muted. And that's when you see when a bad results and the stocks move and the sector moves, that implies that you're almost bottoming out. So that's point one. So I don't expect a huge great quarter from Infosys, maybe, if you extrapolate what's happened so far in terms of the results season. But I think one thing which is very clear, IT sector is driven by revenues of larger deals. And US seems to be far more optimistic than the last time I visited in December. So point one I'm making is there is signs of bottoming out. Not that you will get a great quarterly result this quarter from the IT sector like you've seen. The other 2-3 Nifty companies which are from the IT sector are still to produce results for the last quarter. But what's important to note is that the revenues are seemingly robust, and that's why you've seen consistent narrative of a good guidance being able to be achieved. I think 3 to 5 years, IT as a sector growing at 12-14%. Seems quite likely. I think the only question mark is the margin, which I'm sure they will be able to manage.
Right. Also, let's shift our focus towards consumer discretionary. Now, we do have HUL who will also announce its results tomorrow. How are you looking at that whole rural recovery? Are we seeing that back on track? And are we looking at consumer discretionary now, actually pushing towards growth, getting those numbers, volumes increasing? What are you looking forward to when it comes to FMCG stocks, at least?
See, I think if you have to understand rural demand, and if you look at agriculture, GDP growth is about 4%, and I think that's going to happen this year as well. Last time we have marginally beaten the GDP expectation. So, of course, the service sector has contributed the maximum growth in the GDP. So that's not from the rural space, but agriculture seems to be the growing at that 3, 4, 5%. So point one I'm making is, of course, the rural demand play will happen, and it's happening as we speak. But of course, when you look at HUL as a stock or any large stock which is a part of Nifty, there's a lot of index fund investing. So index fund investing is practically the stock is out of the capital market. So I would see it in conjunction with promoter equity, because once a index fund manager buys it, it's not opinion oriented. It is a mandate. So unless the fund loses money to redemptions, that money is going to stay there forever. So that specific quantum of free float is disappeared for long periods of time. So they will command a higher PE, but I don't see very, very stupendous growth. But I think because of this whole self-fulfilling prophecy of more money coming into index funds and more free float getting absorbed by index funds for good practically, is going to keep them at a higher valuation for long periods of time.
Right. So you are seeing rural recovery play out, at least in this quarter. Will that also convert, and will we see that also play out for auto stocks? Today, if you look at the top losers, they are among the auto counters. So what is your view on the auto sector, and should one be, looking at them right now, or should we wait and play those games for post earnings maybe?
See, unlike an IT sector, auto sector is a very divergent sector. So it's very business specific. So if you ask me on a generalistic basis, I think the rural demand is going to help the auto sector. And there's several other things which will help the auto sector. So I would be bullish on the auto sector, but being more stock specific in the auto sector is a prudent strategy, because each business has a different segment and different market they're catering to. So I would say auto sector in general should be an outperformer to Nifty over a year, 2 year period. But there it's more critical to be more stock specific because of the divergent business segments.
So Feroze is telling us to pick and choose what we want from the auto sector, not the sector as a whole, but particular counters that you need to be looking out for. But Feroze, can you tell us more about this report that you all have put out on small caps, and whether one should be increasing their allocation now towards small caps? What is the rationale there, and why should one be actually looking at it? What are the reasons that this will really play out for the benefit of our viewers?
See, if you have to derive inferences from mathematics, it's reasonably clear that small cap as an index can do well. Why? Because firstly, when you look at each stock and its earning, I'm giving you small cap as a proxy is Nifty small cap 250 as an index, which we analyzed, and we looked at each constituents and their earning growth potential and target prices. It has a relative better outperformance of about 5 to 6% vis-a-vis Nifty on a like-to-like basis. That's point one. Point two, last 5 years, small cap has underperformed Nifty for a quantum of 4% per annum, which is a reasonable underperformance for 5 long years. And that has seldom happened. If you look at whenever this has happened, it has happened 221 days out of the 736 days we analyzed. We saw that the subsequent 3 years, small caps have outperformed every single time. So, of course, futures something which history can't dictate. But history can give you some degree of probability assessment. So that's why the odds that small cap will outperform large cap over a 3-year holding period is reasonable. That's point two. Point three, there is a strong correlation of domestic flows and small cap and mid cap segment movement. I think domestic flows are going to be robust from an institutional standpoint. We had 14,700 crore SIP number. I had called for a 25,000 crore number when this number was 7,000. I think we are headed towards a 25,000 crore monthly systematic investment plan over the next 3 years. So that will give enough liquidity to these two segments, largely the small cap segment. And when FIIs pump in money, you see a strong correlation between FII movement in and the large cap stocks. So these are the 3 out of the several reasons we analyzed to come to the conclusion that the probabilities are stacked up in your favor for small cap outperformance to Nifty over the next 2-3 year period.
Well, thanks so much for that, Feroze Azeez of Anand, Rathi, giving us what he thinks would really make those changes for the Nifty, whether we're headed and how to be riding this bull run. Well, with that, it is a wrap on Opening Bell. Thanks so much for tuning in. Lots more lined up for you right here on Moneycontrol.